So if you like our kind of rapid fire, throwing all sorts of stock ideas at you, I have good news. We're not done. I believe Todd has 10 stocks for our smattering this week. And so, yeah, here comes the list of stocks I might buy next week.
Yeah, okay, so this is what I do every week, people. Okay, I go through and we do best and worst stocks by sector. So that's across all market caps. It shows them all to me. So I can look at basic materials, I can look at consumer goods, I can look at energy, I can look at REITs, services, tech, whatever. And I can see, okay, regardless of market cap, here are the strongest scoring in our research. So I scan through that. Then we also do report best and worst large cap, best and worst mid cap, and best and worst small cap. And we show the strongest sectors, the weakest sectors, the strongest industries, the weakest industries. And we always give a couple ideas in the industries. And oftentimes those industry ideas won't show up in the best stocks by sector group. So that's why I like to look at both of them and kind of go through and find different ideas that I can highlight for our smattering of ideas. And I use this to continually keep my watch list fresh, because I believe that's so important. You've got to always be hunting for new ideas that could really benefit your portfolio. So with that being said, and kind of a quick and dirty explanation of what my goals are there and how I do it, let's jump right in. First up, and you'll notice, Joe, we talked a couple weeks ago about how I wanted to get more healthcare stocks into my portfolio. I wanted to build up my watch list of healthcare stocks. So you're going to notice here that I am indeed finding some healthcare stocks. You'll see a number of these 10 that we talk about today are going to fall within that sector. So if you're a healthcare investor, stay tuned because there's some good names in here. So Evolent Health, EVH is the symbol there. Develops end-to-end built-for-purpose technology-enabled service platforms for value-based healthcare. Okay, so healthcare is provided either as a fee-for-service, or they have these, more recently, value-based incentive plans, especially for populations that tend to consume a lot of healthcare. So think of like the Medicaid population or the Medicare population. So Evolent Health has services and solutions that helps providers and payers, like insurance companies, manage those value-based plans. So if my assumption is that, you know, fee for service, pay to go visit your doctor once, whatever, is not the best solution for kind of making sure that you're managing each patient and you're giving them the right amount of care, then this would be, I think, a good alternative. And obviously, you know, people agree. I mean, look at this. The revenue isn't there last quarter, but it did grow 15% year over year in the quarter prior to that. They are expected to turn a profit in fiscal 2022 after a multi-year string of losing money. And it's breaking out, Joe, here. 22.35 was the prior high in March, and today up 4.3% to $23. And there's just no volume on these down days. So someone, in my view, I mean, look at all these spikes: 1.7 million back in February, 1.5 million back in March. These are volume spikes on up days. Someone's accumulating a position, in my view, an Evolent Health EVH. So I want to have that on my screen. Second stock, Biolife Solutions, BLFS. Hypothermic storage and biopreservation media for cells, tissues, and organs. Okay, so this is a company, think about it, we have gene therapies, all these things that are being developed, you know, using biologic stuff that can't be just left out. It needs to be either frozen or refrigerated.
COVID vaccines.
What Biolife does is it manages that end to end.
Yep.
Right. Freezers, the shipping of it, the thawing of it. Revenue up 39% year over year in the March quarter to 17 million, and expected to earn 20 cents in fiscal 2022, and bumping its head right up here around 47, 48, which is where it peaked out in December or March. So look for a down day. That could be good. And look at Joe. Look at the buy volume days.
Wow, how many consecutive days is that?
One,
it's got to be like 12.
3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. It's like 15. It's like 15 Crazy. Consecutive up days.
Yeah.
Including one really high volume up day on the 25th of June.
Yep.
And then, you know, a couple down days, but very low volume. And then 4 or 5 more consecutive up days, including an above average volume day yesterday, 2 days ago. a down day yesterday, and then today we're trading up about 2%. So this is one I think you can put on your watch list as well. And actually, these first three, Joe, are all small cap. So these are all coming from our small cap best and worst list. Forrester Research, you may have heard the name Forrester. A lot of companies will say, oh, you know, I ranked well in certain this, or Forrester Research says my total addressable market is that, or whatever. Well, that's what they do. They research technology companies, and they provide that research to, you know, various users. Could be on the financial service companies, it could be the technology companies themselves, whatever. Revenue up 7% last quarter. Earnings per share expected to grow 26% next year in fiscal 2022 to $2.07. Technically, you got a nice W formation, which you can see on our charts. If you go on YouTube and watch this on YouTube, you can see us showing the charts. And we're trying to test this $47 peak area from March. So I think that that's also one, Joe, that we can put on the list. Moving on to mid-cap. Energy still screens very high for us, even though we had that big battle between the different members of OPEC last week. They couldn't come to terms on how much they wanted to boost production going forward, and that does create some instability. So hopefully we'll get some clarity into what OPEC's plans are in the next few weeks. But energy still screens really well in our research, and Matador is one of the top scoring in the mid-cap space. I don't want to look at the revenue when it comes to a cyclical like energy, because we're not really seeing that year-over-year explosion that we'll get from realizing the higher prices. But as we get higher crude oil prices, but as we get a couple more quarters in, we should see that really start to flow through, and should see the revenue growth that I'm anticipating, double-digit revenue growth for these companies. They make most of the money drilling for oil and natural gas in the Permian Basin, and that is one of the historically lower cost areas to be producing oil and natural gas. Expected to earn $3.90 in 2020. That's up 31% from 2021, which is up 440% from 2020. So you can see that explosion, Joe, of expected earnings because of the higher year-over-year change in oil prices.
Right. Yeah, we've talked about this one on the show before as well. I don't remember when, but back when we were really heavy on energy stocks.
Yeah, and I think it's just another one that you can sort of stick in there for your portfolio there on the E&P side. All right, moving along here, Inari Medical, symbol there is NARI. Inari Medical, products to treat and transform patients with venous diseases. So, okay, rather than using an arterial device to remove a blood clot, they have developed devices that are specifically to be used in the venous system, so deep vein thrombosis, that kind of thing. And demand for it's very high. 113% revenue growth in the March quarter to 57 million, 27% EPS growth expected in 2022. And Joe, a lot of these companies could see resurging demand in the cardiovascular space because people, now that they're vaccinated, are going back into their doctors, they're getting evaluated, they're getting their cholesterol screening, they're going and getting their stress tests. So a lot of this, I think we're going to see the number of procedures for cardiovascular procedures and including being the stuff that would Inari targets.
Yeah, more generally speaking too, like all those elective surgeries that people have been forced to put off for the past year or so. People are now going to be going and getting whatever it is, knee replacement, hip replacement, yeah, and basically anything. So
yeah, you can bring right, exactly. You can look pretty much throughout medical devices for and probably benefit from that trend, Joe, across the whole basket. CDNA is the next one, CareDx, and they are pre and post transplant knowledge, if you will. So, you want to get tested to make sure that, to find out first if you need to have a transplant, kidney transplant or something like that. And then you need to get matched. And then once you get the organ transplant, you need you need technology and tools that help you monitor that transplant recipient. And, this company does that. So CDNA, revenue up 76% year over year to 67 million in the March quarter. Still loses money, but it should lose less in 2022 than it does in 2021. And again, with these kind of companies that are growing this fast, 76% revenue growth, all I'm looking for really there is a pathway to profitability. They don't have to be profitable yet for me. Now, your rules may be different, right? But everybody's rules are a little bit different. But for me, as long as I can see a pathway to profitability, I'm okay with it. Next one is Teradata. Well, I just typed in the wrong symbol there. Citigroup. Teradata, TDC. Okay, enterprise data warehousing, including enterprise analytic technologies and services. This is an interesting one, Joe. Once upon a time, I was much more familiar with this company. It's just sort of back on the radar now because it's showing up in the best list. And I started looking at this a little bit more, and I'm like, yeah, if they're able to leverage information and provide insight on that information for their corporate clients that other people can't get elsewhere, maybe they are going to start to see a prolonged period of double-digit growth. And maybe we're starting to see that, Joe, because in the March quarter, we do see revenue growing 13%. In 2021, earnings are expected to grow 31%. And Joe, I'm just looking at the chart here. And look at this in February where they reported, I'm assuming that's their earnings report. Big gap up and then 3 consecutive days. And just listeners, as a reminder, I don't remember if it was Marty Schwartz, but I think it might have been. When you get the third day, that's these big gaps, that's usually a good time to sell. So you sell on the third day if you're a shorter term position or swing trader. Anyways, you get that big gap up in February with 3 days, kind of trends downward to sideways until April when maybe it reported earnings again, Joe. Another big gap up. And then you have 1, 2, 3 up days. And then sure enough, starts to trade back down sideways, fills its gap. And then it's been climbing up through March, June, and now sideways pretty much since mid-June. But again, I see these big spikes. Someone out there is accumulating shares in Teradata TDC. And I think that this is a name that I want to have exposure to because of that. All right, pressing on, moving up in market cap to large cap. Summer is actually not a bad time of year for waste management companies. So, there are 3 that screen high for us. I mean, you could just go to the biggest one, waste management, WM, and get involved with that. I mean, revenue's up 10% last quarter, year over year. And that's, think about it this way, you've got people going back out to restaurants, you got a lot more trash being generated, a lot more getting picked up, a lot of new restaurants may open up in spaces that others have vacated. You've got a lot of construction debris from remodeling or from new home construction that has to get dropped in those big containers that they haul away. So waste management's a stock that screens well, I think you can pick up. You could also take a look at Republic Services. I'm just giving a bonus idea, RSG, in that same space. UHAL, Joe. You ever use a UHAL?
I have.
Yeah, Amerco is the name of the company. The symbol is UHAL, UHAL. Truck and trailer and self-storage room rentals for do-it-yourself moving and storage. Pretty self-explanatory business. 2022 expected to earn $32.55, up 4% from 2021. And the end of March quarter up 29% year over year to $1.1 roughly billion in revenue. Again, I like it when they rally up. See these multiple consecutive days up, Joe? 1, 2, 3, 6, 9, 10 up, right? Back above the 50, 21-day moving curling up, 200-day moving average still pulling up. And then we sold off on 3 consecutive days of lower down day volume. So I like that. That to me, again, that's you had a couple profit takers and then, but really not a whole heck of a lot of incentive to get out of it. So UHAL is a name that I think you can throw on your list. And then in India, Dr. Reddy Labs. We were talking about ADR ideas earlier on. This is another one in the healthcare space. Indian developer of active APIs, active pharmaceutical ingredients, used in drugs. So, they do generic drugs. They make the stuff that other drug makers use within their medications. And they operate in, an area that is seeing a lot of demand for healthcare right now in medication because of COVID. So Dr. Reddy Labs, symbol there, RDY, 10% year-over-year revenue growth last quarter. And in 2022, expected to grow EPS 68% to $2.64. And again, nice buy volume days and not a whole heck of a lot of energy on the sell days.